Let's check it out. This dude seems like he won't disappoint us. Yes, you're right, Jack Ma. After more than 2 years of overseas exploration, officially returns to China. Last night, Alibaba dropped their second quarter performance report, which can be seen as Jack Ma's first report card since coming back. It's also the first quarterly financial report released by Alibaba Group since they announced their 1+6+N organizational transformation plan. From this report, you can get a glimpse of current situation after the spin-off and catch a sneak peek of what Alibaba might look like in the future. Alibaba's second quarter revenue grew by 14%, operating profit jumped by 17%, and net profit attributable to shareholders reached a whopping 34.3 billion. Alibaba CFO Maggie Xu explained the quarter's growth as robust business momentum and a focus on operational efficiency across all sectors. But my friends, if you carefully read through this 30-page financial report, you will notice that fine of over 7 billion yuan imposed on Ant Group doesn't reflect in this report. Also, Alibaba has been downsizing for 6 consecutive quarters, with 11,065 people leaving the company in the first half of the year alone. So how should we fairly evaluate Alibaba's second quarter performance? When it comes to calculating its net profit on the financial statements, we gotta talk about investment gains and losses. Alibaba owns a chunk of Ant Group's shares, so this fine is gonna impact Alibaba's investment gains and losses. In their financial report, Alibaba says this fine isn't reflected in the latest report. In other words, if we consider the impact of the fine, Alibaba's bottom line profit might have to take a hit of several billions in investment gains and losses. But here's the thing, my friends. The fact that Ant got fined means that the temporary crisis in the platform economy is over. I've got a video all about Ant Group in my playlist. If you're interested in that, you can go back to check it out. So for investors and those who believe in Alibaba 7 billion, I think it's not a big deal. And guess what? The stock market sees it too, because Alibaba's stock price is on the rise. So from performance perspective, it seems like that Alibaba's reform have made some breaking through. Now, what's happening inside Alibaba? I'm talking about the business spin-off, structural adjustment, and the massive personnel change. How's the feedback from within the company? Well, today I also will share I've heard from local sources and my own understanding about it. First off, we are seeing some major changes in the company's business strategy. In 2023, the Taobao system is giving more weight to daily active user, which can be called as DAU, as an evaluation metrics, and gross merchandise volume, which also can be called as GMV. So DAU is bigger than the GMV, and they're making adjustments around that. And guess what? This shift is already showing positive results. According to the financial data, Taobao applications DAU has grown by 6.5% compared to last year and has been experiencing rapid growth for 5 consecutive months. Next, let's take a look at how the personnel changes have impacted Alibaba's reforms. According to the latest financial report, as of the end of June this year, Alibaba had a total of such kind of employees, but back in March, they had only this volume. So what does that mean? Well, it means that in the months from April to June, 6,541 folks said goodbye to Alibaba. And it's the first major round of layoffs since Alibaba was founded. Now, let's talk about the management side of things. According to the insiders, there are 2 key points to note. First is that Taobao and Tianmao is planning to improve the existing performance valuation system. And second, they've been emphasizing internally the need to change the current status criteria of career advancement for those frontline employees. In terms of the performance valuation system, the higher-ups in Taobao and Tmall are shifting from relatively complex system to a three-tier valuation system. The idea is to give the hardworking employees a greater sense of achievement and relieve some pressure from the frontline workers by shifting it to the managers. In terms of the management tools, the entire Taobao and Tmall team adopted the OKR model in the past year, and even after spinning off, they still maintain the OKR system. But to sum up, Taobao and Tmall's entire strategy revolves around three key points: putting users first, foster ecosystem prosperity, and third, being driven by technology. Alright, let's check out how the other businesses are doing. On the evening of May 30th, Alibaba unveiled the IPO roadmap for its 6 major business groups and other subsidiaries. The CFO of the Alibaba Group said the board has approved Alibaba International Business seeking external financing, Cainiao exploring the IPO process, and Hema implementing its IPO plan for these business groups and subsidiaries hiring an IPO. The performance presented in its financial report has a significant impact on their IPO journey. Cainiao had a quarter of impressive growth. On May 80th, Alibaba announced that Cainiao's IPO is expected to be completed within next 12 to 18 months. The financial report shows that Cainiao's quarterly revenue grew by 34% year-over-year to 23 billion yuan. Wow, that's amazing. And in June, Cainiao put 3 new international sorting centers into operation, bringing the total number of operational overseas sorting centers to 18. There's nothing that even though it has been spun off, Cainiao can still team up with other business groups. For example, during the quarter, Cainiao launched a service for AliExpress choice sellers, offering lower costs and faster delivery. Here comes to the Alibaba International Digital Business Group, which experienced growth in orders during the quarter. The financial report reviews that Alibaba International's overall retail business orders grew by approximately 25% year-over-year. This group trend extended to Lazada and Trendyol. During the quarter, Lazada achieved a double-digit year-over-year growth in order volume. The easing of the pandemic brought good news also for the local service group. The revenue for the local service group grew by 30% over year to 14.4 billion yuan, with order volume increased by over 35% within the local service group. Alibaba achieved year-over-year growth in gross merchandise volume during the quarter. In the second quarter, Alibaba optimized its supply chain for products like electronics by introducing authorized Apple stores and Sony's offline stores. However, the local services group still faces ongoing challenges of balancing its expenses and revenue, with quarterly losses continuing to narrow down. For Alibaba and its business groups, the past quarter was a period of significant change. But let's not overlook the challenges ahead for Alibaba and its business groups in the domestic e-commerce landscape. Platforms like Douyin, Pinduoduo, and Jingdong are all seeking growth. Competition is heating up in hot regions like North America and Southeast Asia, and in the local services sector, the ongoing battle between Douyin and Meituan since last year is stirring up the industry once again. Alibaba has a long and challenging road ahead. Stay tuned, folks. There's a lot more to come in the ever-evolving world of Alibaba. I will update that for you. If you want to invest in China, subscribe my channel and get a latest perspective of the equity research.